Traders, I'd like to welcome you to the official launch event with ARC AI, sponsored with NeuroStreet Trading Academy. I am your speaker and host today, Sean Kozak. Before I get into the event, I just want to let everybody know that we are recording it, and we will distribute that recording and any details following the webinar. If you have any questions, type them in the chat box. Please be so kind as to give me time to get through the presentation, because ultimately, if I don't see your question, I'm not ignoring you. I'm just on topic. I got lots going through my mind. I want to make sure that I can share this information with you and be of service with your time as well as mine. We will allow for some time at the end of the event to do some Q&A, and we are hosting another AMA tomorrow to carry off the launch event with primary invites to our prop program traders, as well as anybody that's interested in joining a free pro bono AMA with us. We normally keep those reserved for the prop traders in our prop program, but we're opening it up as a result of the launch event to get everybody a chance to come in with some experienced traders. We are going to be talking about the UniZones software. And when we say uni, it stands for universal. And when I mean universal, I mean universal. You know, it's if you go camping, you know, there's certain tools you never leave home without. I'd like to think of this as one of the most beneficial tools we've ever built with our dev teams in terms of zone software, levels software, trade entry strategy software. And it's a big event because our prop program has been waiting for this very, very patiently. And for anyone in here that likes trading supply and demand, support and resistance, or order flow analysis, or smart money concepts, or, you know, big trades, or even scalp trades, we're going to definitely kick things off. So without further ado, thank you for your attendance, traders. It is appreciated. I do need to cover a quick disclaimer. As always, we're not here to give you advice. Can't guarantee profits, nor would we want to. And if you are trading, please accept the risks. Do so at your own discretion. Past performance never guarantees future results. Okay. Are you guys okay with the risk disclaimer? Type a Y in the chat box so I can go forward with this. I want to make sure that everybody's comfortable with risks in the business and I don't need to babysit. Excellent. So, quick agenda. We're going to get into the meat and potatoes. So we're going to go through the agenda today. We're going to talk about, you know, support and resistance not being so supportive in your trading. You know, no pun intended. It's not always as easy as it thinks. And we really want to kind of map out the problem that a lot of traders identify with. We're going to kind of give you kind of a light at the end of the tunnel. You know, we don't build tools for the sake of just putting products into the market. We build tools to solve a problem. And when there's a need for something drastically, we build it because A, it's going to make things faster, make it easier for you to do your job. It's going to give you time, lots of time in your prep, so you don't have to do things manually. And then it's also going to give you kick-ass strategies, right? Like we want to make sure that you've got really, really good reasons to get into the market, not just some random signal or some random idea put together. Like there has to be some logic behind the strategy in order for anybody to want to trade it, right? We're going to talk about structure zones that are designed for price action analysis around market structure. We're going to talk about supply and demand zones. We're going to talk about order blocks, which is something that many of you may or may not be aware of. And then we're going to talk about traps and imbalances. And what's interesting about this webinar and this product and the strategy at large is that most people think that support and resistance is just support and resistance, or most people have heard supply and demand. Well, I'm here to tell you that there's 4 types of support and resistance, and there's 4 types of supply and demand. So it's not just one way of doing things. You need to understand what it's designed to do, why you would want to use it, and why it's superior to everything else that's available. Now, can you guys do me a favor and just type a yes if you've ever traded with structure levels, supply and demand levels? Yes or no? Okay, we've got a lot of structure traders in here. We got a lot of supply and demand traders in here. Perfect. What about order blocks? Has anybody in here ever heard of order blocks before? Can you guys type a yes if you've ever heard of order blocks or smart money concepts? I know if you're a Forex trader in here, you're definitely familiar with the concept. Forex traders don't have the leverage as futures traders do, meaning they don't have the ultimately the volume analysis at large like futures traders do. And we're going to get into what order blocks are. We're going to talk about how they can be more superior than supply and demand and what they're actually doing and how they're created and why they're superior. It's normally the footprint of institutions stepping in, which most people don't realize until they get back to those areas. And we're going to talk about that. We're also going to talk about traps. Traps are normally what we call areas of liquidity grabs. So we want to be able to teach you where the big boys are going to try to grab liquidity to pump the market. And it's strategic. It's done on purpose. So if anyone's ever wondering why certain random things happen, well, there's a reason behind everything, guys. And the software that we built will identify where that's likely to happen. Okay. We're going to talk about how we've put everything into a all-in-one solution, right? You know, the truth is we could build 4 different products, sell 4 different systems, and it would cost everybody so much more money. And what I normally like to do is I like to say, okay, well, where do all these tools belong? They're all levels trading strategies. They're all needed for the same kind of concepts. So what we decided to do is save everybody money and put all 4 products into one master all-inclusive solution, so that you get everything in one and you guys can save, 75% on costs. How many of you guys think that that's a better strategy across a business as well as the user? Can you give me a yes if that makes sense to you? I want to know where your head's at. You like saving money and you like to have it all in one, right? So I'm going to go over a demo. I'm going to try to keep the demo kind of more universal today. I will be showing you some strategic examples, but I want to talk more strategy tomorrow so that you guys can come into the AMA as well. Because the truth is, the way that you can trade this software, there's probably 100 ways you could use this software. And that's the truth. It's kind of like order flow. You know, if anybody's ever used order flow, there's so many ways to use it. You got to decide which way is best. And we're going to talk about some of the key ways you'd want to use this. We are going to be giving away a license. So because it's a launch event, we always arrange one free giveaway to one lucky member in attendance. So stick around to the end or you won't get a chance to be a part of that. And then we have launch pricing in place with every main product release. One big thing I want to mention is that how many prop trader programs we got in here? How many prop traders in our prop trading program? You guys, if you're in our prop trading program, your pricing and your purchase links will be in the back end of your program members area, like we always do. Anybody that is not, if you type an N in here, if you're not a member of our prop trader program, just type an N, which is fine. We just have a different link for you to be able to get access to the tools today. And the truth is that it's just a matter of which program you're in. We'll give you a different link so that we can give you the offer. Okay, guys. So that being said, we'll do some Q&A and we'll get you guys off on your way, and everything should be good. Okay, so let's get into this. Okay, so the major problems with support and resistance. The truth is, most people don't know the difference between strong levels. How many of you guys have ever said, well, why does this level hold versus that one? I think it's the number one problem most people are struggling with, is how come one level of support and resistance will hold versus the other? And ultimately, why? Why does supply and demand work some areas and why does it not? Why does order blocks work in some areas and not? Why do levels work in areas? Can you guys agree that that's a pretty important question? Right? Weak levels versus strong levels. Okay. The truth is, weak levels will cause a reaction, but it's ultimately not where the big banks were planning on doing some business, right? Retail traders aren't moving the market. They might help contribute to reactions, but they're not really doing anything of nature. So what constitutes a strong area? Well, you need to know what the bigger guys are looking at in order for a levels strategy to truly work. Think about order flow as a timing tool. Think about like signals on divergence as a signal tool. But when you think levels like support and resistance, supply and demand, traps, or order blocks, you want to start thinking like the bigger guys, because that's where they're planning to move their money. And I know this is something what everybody's always heard. Oh, you got to trade with the big banks. No. That's just a bunch of marketing hocus pocus. What you need to start realizing though is what are they looking at and why? And there's a reason behind it, because they run their bigger blocks of business like a business, meaning they have to buy when things are cheap and they need to sell when things are expensive. But they also need to do things strategically because they're moving a larger amounts of money around. So they need to see where they can actually get their fills, where they can leg into the market, how they can do that. And that's exactly what we're going to be doing today, is differentiating the problem so that you can actually leave here with a solution. Okay. So here's an example of a level of resistance, right? And then the question is, well, why did the level break? It only gave a reaction versus why did the level at the bottom give the bigger move. You have a level of resistance, that's there, and most people are thinking, well, that's great resistance, and it looks like a viable place. And you know what? For a scalper, it might just give a great trade. But to a trader that's trading for, maybe a 1 to 10 R multiple, they're not going to be looking for reactions. They're going to be looking for the bigger trades. Okay, so there's a few different types of traders in here. There's traders that are looking for a few ticks. There's traders that are looking for a few points. And then there's traders in here that are looking for the trip to home plate. And all of you are right. And our software is going to accommodate every one of you in a different fashion. But I think it's important that you understand how to use our tools for all of those objectives. And so the key here is to know that the support in this example is a much better trade for a bigger trade versus the resistance that was only looking to give a reaction on a transitioning market. Okay. So how do you plot the support there? How do you plot the resistance, right? How do you know where that level is, and how do you know where it should be or where it shouldn't, right? Well, it's kind of like trying to decipher a hidden language. The truth is, if you, in my experience, and I'll just share my own experience with you, everything up until support and resistance is actually fairly easy to understand. The moment you start understanding structure and control and levels areas and major areas of interest, and understanding the side of the market that you're in versus internal and external structure and which levels are holding, this is where everybody's eyes kind of starts to go a little weird, and everyone's like, I just get fed up with it. How many of you guys have ever felt like, it's too much to learn, or this is too complicated, or this stuff isn't easy to understand? And then all of a sudden they just give up on something. Can you guys just bear with me on that? Just be honest. How many of you guys have ever felt like you try to learn something, you feel like it's important, but then all of a sudden it gets a bit too difficult, and you're just like, you know what? I just can't take this anymore. I'm going to find something else, right? Well, that's what happens with major levels of support resistance. Structure trading, right? Structure trading is that, right? The reality is most traders don't know how to read price properly. And what happens is, because of that disconnect between an understanding, they don't feel like it's important anymore. They just move on to the next quick shiny object, or they move on to something else, right? I know, because I felt like that at times, especially as an experienced trader and as a system developer. I know the difference between easy concepts and difficult concepts. Well, the thing is that if you can understand how to make difficult concepts easy, then you can take what's the most important and make it work for you. There's a reason why difficult things are difficult, because they're really hard to understand, but that's kind of an advantage. Once you learn it, you're in a different level. You're in a different league than everybody else. And when you can be in a different league than everyone else, you can get paid differently. It's like your pay level increases, right? So a lot of traders are going to use tools that are going to just tell them what to do. And I can respect that. There's reasons for tools. There's an advantage to using tools. Okay. A lot of traders are trading the same levels, expecting them to give the same reaction, right? A lot of times you think, well, this level is going to hold, or that level is going to hold. And what ends up happening is, by the time you finally understand what side of the market you're on, or you figure, okay, I finally got that swing right, or I finally got that levels right, or okay, I think I'm on the right side of the higher time frame, and what ends up happens, you've already missed the move, or you're completely off on the wrong side of the fence. Okay, so what ends up happening is that you feel like you're decoding something. You're trying to figure out something that's difficult. Well, the truth is, I'm going to go into this. I'm going to say, most people, okay, most people don't believe in their abilities when things get hard. How many of you guys feel like you second guess it? I think someone here says you feel like you're second guessing. Bradley said. Anybody in here ever feel like you're second guessing where the right levels should be, or where the market's supposed to turn, and where you think it's going to be? And sometimes you get it right. Sometimes you get it right, and sometimes you don't, which is fine. There's a level of chance that works in your favor. Anyone can expect a mulligan once in a while. The problem is, though, is that you leave the room, your office, you go to sleep, or you sit down with your family and you have dinner, and in the back of your mind, you're thinking, well, that worked, but I got lucky this time. Or, you know what, it didn't work today, I'll do it tomorrow. Then you go into the office tomorrow and it doesn't work. And you're like, well, I can't trust this. And what ends up happening is there's a negative disconnect between what's truly there versus what you're not allowing to happen. And that's the difference between what I'd like to do over the next 2 days is I'd like to demystify some things that a lot of people are probably not understanding about levels trading and ultimately give you guys some actionable strategies that you can leave here that have some freaking merit. I've been spending months putting together some concepts that it's not just months of my time, years of professional traders have been doing things in specific ways. I've had the privilege of working with some very profitable and very experienced structure traders that have trading for big prop firms. And I spent a lot of time picking their brains. And when we were building this software, I really kind of got a chance to meet with some really high level traders that were doing some big numbers. And I was able to take a lot of the stuff that they were doing and bring it into what we're going to be teaching, both in the prop program, as well as just you that are using the tools so that you don't need to learn some random language that no one understands. And my goal is to give you guys an edge that is both for scalping, day trading, and levels trading on higher time frames. Does that sound like a plan, guys? Give me a yes if that makes sense. Okay. No longer fearing, no longer second guessing, actionable reality, getting some real tangible strategies with some rules, some cheat sheets, these types of things. And I'm going to do my job and I'm going to tell you guys, this strategy is for scalpers, okay? Or this strategy is for big level traders, or this strategy is for Forex versus this strategy is for futures, because you cannot take everybody and put them in the same cookie jar. Can't work, okay? So here's the reality. When you draw levels, what ends up happening is you're either too late to the party, or you miss the move, or you get stopped out. One of those three things are going to happen. You're either late, okay, or you have a bad fill and you get in the wrong time, or you get in on the wrong side of the market because you misread the information, okay? What my job is here over today and tomorrow is to give you rules, defined rules. I'm not a big person of subjectivity. I don't believe in it. I don't think there's a place for it. Anybody that says, well, we could do it like this and we could do it like that, they're just hoping on something that's really going to fall over. It's like a house built on sand. If you don't have rules, you can't test it. If you can't test it, it's not a strategy. If it's not a strategy, there's no edge to it. So what we're going to do is we're going to give you that ability to take the software that we have today and then put strategies for different types of traders using it, okay? So what we did was we built a tool set. It's called UniZones. And what we're going to do is we're going to go over some examples of how the software has been designed to be traded, because you're looking at a Renko chart here, but there's a reason this Renko charts have the zones on it like this. Okay, now let me grab a cursor here for a second. We're going to just do something. You're going to grab a draw tool. And while I'm waiting, can you guys do me a favor and tell me if you're a futures trader or a Forex trader? I just want to know if we have who we got, futures, Forex, or both. Can you type both in here if you're both? Okay, we've got some both traders, a lot of futures traders. We've got both, some Forex traders in here, futures, Forex, okay, futures, both. Okay, we got Forex traders in here, so that's good. So you're going to understand some of the stuff I'm going to talk about, right? You got some, some bigger futures options traders, okay, perfect. Okay, now I'm going to go into the next question. Can you tell me if you're more of a scalper day trader or more of a day swing trader? Todd, trust me, we're going to go over there. We got scalpers, scalper, swing, intraday scalpers, a little bit of scalpers. Got a lot of scalpers in here, Day swing. Okay, perfect. Day swing, scalp with several points. Okay, so we got a few. A lot of day traders in here. Perfect. So what I'm going to do is I'm going to show you some slides. And then I'm going to give you a document. I'm going to talk about this document so that all your questions are pretty much going to get answered on that document. So just bear with me. I can assure you I'm not going to waste your time. This is a support and resistance setting. So these levels that you're seeing on this chart are based off of support and resistance, not supply, not order blocks, not SD price breaks, not traps. There's a reason for it. When you're using certain bar types, certain zones will be designed for that. If you're using custom Renko charts or if you're using range charts that have fixed bar types, then you're going to want to use the zones based off of support and resistance, not supply and demand, not order imbalances or traps. The way that it's designed is to accommodate custom bar types like Renko and range to work for support and resistance, okay? And you're going to have the ability to have fresh levels, tested levels, broken levels, prior broken levels, overlapping levels, you name it, it's got everything, okay? Here's another example. Okay, let's go in here. Here's another example of supply and demand concepts. What we've done is we've created an algorithm that identifies consolidation. What we do is we identify consolidation. Once the consolidation is identified, we have a breakout of supplier demand. When those breakouts take place, our software will create what we call a thrust bar. Now, some of you that are old-time clients have probably heard this concept using the old SD volume zones. The difference between the SD volume zones and this is that the SD volume zones was built off of a volume weighted TPO algo. It's not based off price, it's based off volume. So the zone logic is completely different. We wanted to build a tool that is completely fast, very, very efficient based off pure price data. You don't have really long load times. You don't have to worry about tick data loading or any of that information. We wanted it to be 100% pure price action. So this is pure price supply and demand levels, okay? And the reason we color the candles is so you can actually see the consolidation before the breakout happens. Now, all of the training and all of the videos and all of the details, we'll cover strategy, we'll cover all that. But if you're going to be using bars like time, or if you're going to be using bars like volume or tick or pullback bars or anything that has variable range means a candle that has, you know, a different size bar every time, right? You'll have small candles, big candles, high wicks, low wicks, big bodies, low bodies. That is a candle when you could use supply and demand levels, because we're able to look inside the logic to create the imbalances for the consolidation period so that we can look at the breakout bars, okay? Now, order blocks. This has kind of been my new favorite levels environment, and I'll explain why. Order blocks are both supply and demand levels, but also institutional footprints, okay? Order blocks are what we call a combination of supply and demand, but with the big money footprint leaving behind an engulfing pattern. And so what it does is it looks at supply and demand, but then it only identifies the supply and demand levels that leave a big institutional engulfing environment where the level creates a massive engulfing bar off supply and demand. And so order blocks is essentially, but what most people don't understand what an order block is. An order block has to be a down bar, okay, a negative price bar for longs, and I'll explain it, okay? An order block in a demand zone like this, you need to have a down bar and you need to have an up bar that completely encapsulates the down bar, but the down bar also needs to be a consolidation bar inside that area. So it's a supply and demand zone plus an order engulfing or an order block level, which creates what we call a big money area. Like and the logic behind an order block is they flush down knowing that they're driving the marking down for exhaustion and then immediately ripping it the other way, or they pump up and they rip it the other way immediately. You don't get these really big engulfing bars, these really big candles like this off of a flush candle prior unless it's manipulation. It's just not happening. There's not some random act. Big money moves the market. And when you have a down up push or an up down push, what this means is it's big money moving the market on purpose. Okay. Well, you'll be able to see that, Todd, when you have the tool. And we're going to show this here as well in the demo. Okay. So order blocks are very, very well known in Forex trading. They're very powerful in futures. And they're very powerful when you use it correctly with multi-time frame analysis. Wicked powerful, okay? Now, let's keep going forward as we get through traps. Now, traps Traps are imbalances. Imbalances in an environment where you have a gapping price. And what a trap is you get areas where the market didn't facilitate trade. So there's pockets of liquidity that have not been traded into that are leaving opportunities for really, really fresh orders that are untouched. Now, the problem with traps is that they can happen in certain areas that are not ideal to be trading. But when you combine traps in the right location, I can assure you that it's going to be one of the most powerful things you ever look at. And when you can combine a trap on a flip level, and I'll give you what I mean by a flip level, when you can take a trap and you can take it and you see a trap taking out structure like this, and they pump the market like that, these are huge opportunities to be able to create areas of major liquidity grabs. We call these sweeps, we call these liquidity grabs. And if you notice, what they do here is they sweep the highs. There's a resistance level, resistance level, resistance level, and they push the market up, and it's called inducement, into a trap that broke structure. These types of areas are what the market's doing for manipulation. And when you can understand that manipulation is done on purpose, you'll understand that's why they call them traps. Okay. They call them traps. So a good example would be this low in here. Okay. This low here, it took out a whole whackload of resistance off the lows, had a very, very clean level of trap. It took out a supply trap, which formed a demand trap that actually broke structure. When the market comes back down to test, there's a reason why it moves like this out of that level and not out of this level. And these are the jobs of the strategy. And I'll explain what I mean by that, because there is no strategy when you just start trading every level under the sun. You need to know location. And I've made a checklist so that you guys can take that checklist home with you today. I don't expect everybody to learn everything in one event. So what I want to do is I've made a document so that everybody can screenshot it. And then what we'll do is we'll give that to you so that you can leave with an actionable rule sheet and a checklist to make sure you understand some of these concepts. Does that make sense? You guys like when we give you those documents? It's kind of like helps you with your planning. You can read it later. You can reference it. It's really important to have those types of things, I think, that help a lot of traders, right? So let's go through here, okay? Let's talk about the demo, okay? So I want to kind of talk a little bit about first, for all of you guys in here that are the prop trader program guys, okay? So let me just kind of just explain what you're seeing here, okay? This is the MES chart, okay, that we use for the higher time frame in the prop trader program, okay? So if you're in the prop trader program, I just want you to do me a favor and just trust my guidance when I say that we will be teaching the zones for the AT system and the volume rotations and all of the ongoing training in the prop program AMAs, because we spend a whole lot more time teaching in those AMAs than we can do in a very short webinar like this. So rest assured, anything that I talk about here that is over and above that you guys will be seeing in that prop program, just note this, that I put a little chart here to kind of make sure that everybody knows that the software that we've built is going to accommodate the prop program, and we're going to go over strategy with all of you traders in a different event. The reason for that is we have specific systems, and this software was designed to be able to accommodate specific needs, like the morning prep for all of our areas of interest on the higher timeframes, and also for areas in which we want to trade trend line breaks out of, or even volume rotations. Can you guys give me a yes that you guys are understanding of that? I want to make sure that all of the prop trader program in here guys know that I'm not leaving you out, because what I'm going to do in this demo is we're going to be teaching some other concepts that are just going to be way over and above everything we teach you guys in the prop program. Okay. For those of you that are in the prop program, your links to get access to this are in the back end, and then we'll be doing an AMA and we'll be talking about it. We'll probably do a couple on this because there's a few different concepts I'm going to be bringing to that program with our educators. Okay. Okay. So we're all on board. So what I'm going to do is we're going to go over these two trade examples up here in a moment. I want to talk about the S&P. Everybody here knows Big Brother. Yes. S&P. I've got 3 tabs down here. I've got an order block tab, I've got a supply and demand tab, and I've got a traps tab. Okay. We're going to start with order blocks. Okay. I'm going to talk a little bit about what you're seeing here so you understand this. We built the Ferrari for levels trading, and it allows you, you can see we're in a price action mode. The difference between these charts over here and this chart over here is this is in structure mode. When you're using Renko or range, you want to use structure mode because it doesn't leverage supplier demand. It doesn't leverage consolidation or traps, or you can't see the order blocks and you can't see the traps in that on Renko charts or on other bars. So that's the difference between looking at different bar types and understanding the concepts, okay? When you look at this environment, this is a volume chart. I like volume charts. I like tick charts. It's just a little cleaner to read sometimes than time. What I'm going to do is we're just going to say I've got order blocks turned on. And what I'm going to do is I'm going to turn off these other levels for a second. Okay, we're going to just take a look at a clean chart. Now I could go in here to fresh zones. I don't really like this zone because it was created off of a CPI report. However, it is valid. It's just a really freaking randomly big ass bar that just dominates the levels. I would never trade those levels. So write that down, that we never want to trade these massive candle bars that are not supporting really good trade activity because the risk is too big, okay? And what I'm going to do is we're going to talk a little bit about these order blocks down here. We're going to talk a little bit of what I'm seeing, okay? What you're seeing is these green candles and these red candles. These are only looking at order block levels. So if you take a look down here, you can see there was a really, really good order block down here that basically hit this area. I was going to give you an example, and we're going to just show you some examples of how the market reacts to certain order blocks. Okay, I'm going to just draw a little line in the sand, just like this. Okay, there's a reason. This is equivalent to like a 5-minute candle. Okay, but there's a reason the market stopped here. Okay, it's because this was a really, really, really big order block. And if I go in here and I turn on broken zones, you're going to see that the software identified that. Okay, now I'm not here saying you should trade all these order blocks. Yes, you can remove the zigzags, you can remove all of it. You can take off all the zigzags and just do that. Yep. So I just want to kind of explain a couple of things you're seeing over here. We can go into some of these other areas. Take a look at this big candle here. Okay, this big candle up here is a great example of a flush. I want you to pay attention to this wick for a second. There's a reason why they took it right there, and I'm going to explain what we're seeing. And then this is not strategy. This is just concepts for a second. I just want to share with you. Do you see how they wicked above the highs like this by a couple ticks? That's called a liquidity grab. And what they did was it's not running stops. They're inducing price to be able to suck in the orders. And then immediately you get an order block. Why is that? There's a reason for it. It's because they're doing it on purpose, and you need to understand what that's telling you. Well, I'm here to show you that there's a level here. We'll just kind of talk about it. There's the order block, okay? And we get up to it, okay? Where did they take it today? They took it right to that order block. They drove the CPI report right into that order block, okay? So when you see these concepts like this, there's a reason these order blocks are valid, what they're doing, why they're important. Now, I'm not here to say that you should be trading every level because that's not a strategy. The software is designed to find the important areas that are leaving clues on the chart. We're going to talk about strategy in just a moment, okay? Now, we get into supply and demand. You're going to see different levels. So I'm going to just show you here as an example, turn off the tested and the broken. There's the fresh and tested levels of the order blocks. Okay, this is a 5-minute chart of the S&P on a volume candle. We're going to go into supply and demand. We're going to go here, turn off the broken levels. You're going to see different levels because these charts are identifying imbalances with consolidations. You can see the candles in here. These white candles are consolidation bars. Okay, these white candles are consolidation candles. And they're designed to find where the market pauses, builds positions, and leaves. And so there's a reason why the software is finding these areas. You can see where we hit the level of supply in here to the tick, it dropped out and they drove it back down again and they dropped back down again. This is not strategy. Like just taking every zone is not strategy. Relying on every level of supply and demand, that's not strategy. The software will do its job and it will be able to allow you to turn on supplier demand. You can have just demand, just supply. You can have just fresh levels. If you look here, the only levels of fresh demand that I see on the chart right now are right here, but that doesn't mean we should just go trade them, right? Like I said, I'm going to teach you features and we're going to teach you some concepts, and then we're going to talk strategy. So the other one over here, and you'll see like this candle is created, this zone is created by 2 bars building a position, 2 consolidation candles building a position. You'll see the level below it was a tested zone. So if I turn off fresh, okay, you're going to see how this level came right into this demand zone right here, hit it to the tick and left. Now, I'm going to talk to you about why this demand zone held, why this demand zone held. I'm going to talk to you about why the other one should hold. I'm also going to talk to you about why we wouldn't want to sell these going this way, right? And why this one failed, right? And I'm going to explain why we're wanting to use certain levels, but it really depends on who you are. And before we go into strategy, I just want to show you features first, okay? The next one would be traps. Let's talk about traps. Traps are liquidity grabs. Traps are areas where the market's trying to find imbalances that are important, that have a purpose. And so if you look here just for a second, like there is a purpose for the market to come down to this level. The market needs to come down there. It needs to come down there to fill liquidity. But what's even more important about this demand zone down here that's from traps is I want you to pay attention to the structure that's blocking it right here. The job of the market is to go where price is never traded. So when the market comes down here and it's like this, when the market comes down here, they're going to try to get below those swing lows on purpose because there's leftover liquidity here. Now, before you say, okay, wait a second, should we be buying that level of liquidity? That's where you should be starting to think like a different trader. A lot of people think, okay, there's a demand zone here. There's an imbalance here, okay? They should be buying. Wait a second. If you're on the wrong side of the higher time frame, or if you're on the wrong side of the if you're on the wrong side of the higher time frame, or if you're on the wrong side of the market, you're going to realize that that liquidity is going to be used for profit taking. It's not going to be used for intent. So there's a really big difference between choosing to be a buyer and choosing to be a seller versus understanding what the big guys are doing in certain areas. If the bigger guys are up here shorting from these traps, okay, building a position here, adding to their position, and then finally taking their liquidity, okay, where are they getting out? They have to know where the orders are in order for them to get out. So this is the difference between understanding strategy versus understanding location to be buying or selling and why. Does that make sense, guys? It's the same thing happens for supply and demand. And the same thing happens for levels trading across the board. Most people think that just because you have a demand zone means you should be buying. Just because you have a supply zone means you should be selling. No, it's all relative to context. It's all relative to where you are, why you want to use those levels, and are you thinking like a reaction trader or a big trader that's putting on a position? So did that kind of make sense, guys? Like I know that's a little bit of an overview. What I'm going to be doing here is I want to pull up this document for a second. Okay. I think it's very important that we talk about it so that you understand key concepts. There's 4 types of levels systems built into this tool. There's price action, support, and resistance. There's consolidation, breakout, supply and demand. There's order block, big level footprint. And then there's trap imbalance, liquidity grab, areas of interest. Does everybody understand that? The software is designed to give you 4 trading systems. Okay, give me a yes that this makes sense to you, that everybody understands that, or at least partially, right? And then what we'll do is we'll make sure that we go into the next discussion. Depending on the type of trader that you are, okay, market structure is going to be best for range and Renko. So if you're trading on range and Renko charts, don't even try to load the imbalances and the traps. It's not designed for that. The supply and demand order blocks and traps are best used on variable range bars, which is time, volume, tick, etc. Here's the big question. Your time frame or fractal is irrelevant. The only thing you need to understand is that that only applies to your style and strategy and objective as a trader. Think of it as you're an in and out trader versus a longer term hold. If you're somebody that is scalping, then you don't need to treat the levels the same way as someone that's trying to catch a really big trade. Both traders are not incorrect or correct. It's all about the objective, right? To a day trader who's a scalper and you're only looking to take four points or 4 ticks or one handle off the S&P, you don't need to be so concerned about, having to be, building a position and these types of things versus someone that's, say, a Forex trader or even a day trader to intraday swing on, say, the bigger trades. So what I strongly suggest is that when we go through strategy, we talk about these 4 things. Okay. Location of the level is always going to be important because it's going to determine the business value area of the market. So I'll give you an example. I know you've probably heard me say this before, but let's just use you own a corner store and you buy a chocolate bar. Okay. Let's say this is a chocolate bar. Okay. And you buy it for $1. Okay. If you own a corner store, you can't go around and take that same chocolate bar and sell it for $1 because there's no business. You don't have a business. It can't make you any money. So in trading, okay, if you're a scalper, you could sell the chocolate bar for $1.10 and that will be your objective, no problem. But if you're somebody that is not a scalper and you need to have that chocolate bar become $3, well, then you need to understand that location is the most important part of your strategy so that you can be trading the proper levels. It's really, really critical. The direction is also very important. Let me talk a little bit about what direction will do for 2 different types of traders. Let's say you've got a swing trader. And when I say swing, you could be intraday swing to long-term swing versus a scalper, okay? So when you have a scalper, direction is going to be on your trading chart. As a scalper, like realistically, if you're looking for 5 ticks, you shouldn't be sitting there worrying about all the other higher time frames and all the extra noise because realistically, the only thing that matters is that you're on the right side of the market you're trading because you're in and out now. So I'll give you an example. If you're trying to take 4 ticks out of the S&P, you're coming down, boom, boom, boom. If you try to buy a demand zone like this, you're in a very, very risky scenario because as a scalper, you have no idea that this 5-tick level is going to hold. But instead, if you do this and wait for the market to break structure, it forms a demand zone in here on an area that failed, which adds a flip zone, which we'll talk about in a second. You have a way bigger, higher probability of taking 4 ticks out of that trade than trying to take 4 ticks out of this trade. And we'll talk strategy on levels and where they are and why. However, if you're a Forex trader, or if you're even a futures trader that's trying to trade for 10 points, or maybe you're trying to catch 1 big trade a day, right? Then direction is going to be key for your higher time frame. And this is the difference between understanding direction as it applies to you as a trader. Okay, does this make sense to you? Because a lot of people think that you need to be on the right side of the higher time frame and then the right side of the smaller time frame. And holy shit, how many time frames are you using? Well, if you're a scalper, most probably you're not using multi-time frame. You might look at the bigger chart just for some context, but you don't necessarily need to be so focused on that. However, if you're going to trade a 5-minute level or a 15-minute level, you're most likely going to be looking at a higher time frame chart because you're a big money trader, meaning you're trying, and when I say big money, you're trying to think like a big money, right? So those of you that are in here like Forex and you do trade Forex trades, most of you are trading like the banks because you're able to hold swing trades, you're able to hold longer term trades, you're holding for those big 1 to 20R multiple trades, right? Futures traders aren't in the same environment because of the rules around most of the prop firms and the overnight margins, et cetera, but Forex are not, right? So what I'm going to do is I'm going to talk to you about location and just direction based off the type of traders that we are, okay? Wholesale and retail. So once you understand location and once you understand direction, I'm going to teach you where to be a buyer and where to be a seller and why. because you need to understand where to buy your chocolate for $1 and where to sell it for $3. You have to know why you're doing that. And we're going to talk about some examples on the crude oil. We'll talk about some examples on the Aussie dollar. It's not so much geared towards scalpers, but I want to talk about why these trades matter so much. And then we'll get into some scalp examples in a minute. Okay. And one of the things I like to do is I like to help traders identify how to increase the probability of the levels. Okay. Number one is we're going to look at what we call a chalk. A chalk is called a change of character, which is an acronym, CHOCH. A change of character is making sure that if you are going to be trading, whether you're trading a scalp trade or a higher time frame confirmation entry, what that means and why that's important. We'll talk about that in tomorrow's AMA. We're going to talk about flip zones. Flip zones are when you break a level of supply and it forms a new level of demand. Those end up becoming quite probable. Same thing if you're looking at breaking demand, it becomes supply. Those end up becoming very, very high probability trades. But all together, it all relatively plays into location, wholesale, retail, and direction. So these are very, very important talking points. And I would really, really make sure that you write them down. You understand that we're going to go into them in more detail, et cetera, et cetera. Okay. So a couple of things I want to talk a little bit about now that we're going to get into in the strategy discussions are mapping out retail and wholesale. How do you know where wholesale and retail is? Well, we're going to talk about some identification processes around the highs and lows of the last swing leg. So if you can tell here on this Aussie trade or this Aussie chart, that's, we're in a downtrend. It's a really high time frame, right? But that doesn't mean you need to be looking at that entire chart. If we were saying we're going to map out the last swing leg, that's the last impulse leg. So what I'd be doing is I'd be saying, okay, from this high to this low, where is expensive and where is cheap? That's a good example of saying, okay, how do I map out the last swing leg? You can also say, if you're a scalper or if you're a big time swing trader, you can say, I'm going to take the high and the low of the last hour or the high and the low of the last day, the last couple days, or even the last week or month. For those of you that are big money traders on the Forex side of things, or even if you're futures traders and you're trying to figure out why the NASDAQ pumped all the way to where it did, if you look at the NQ chart, and I'll show you the NQ in a minute when we get to it, you're going to see, ironically, the last couple of days, they keep flushing the highs and then driving it down, flushing the highs and driving it down. That's not an accident. If you understand what's going on and you understand where they're driving it to, you'll understand why these concepts are important. Because everybody that's in the day trading little bubble doesn't know what's going on. But it's important that even if you are scalping, you should be looking at it with very, very high accuracy. Okay. Now, as I said, you can scalp, day trade, swing trade, or you can trade any solo or multi-time frame chart. The difference will be how you enter your trades. And to me, there's no right answer to this. It really just depends on your risk tolerance. As a scalper, most of you will be first touch traders. Most of you are going to be first touch traders because you're just looking for reactions. You're not looking to put a big position on. For those, I'll give you an example, right? Let's, you got trader A and trader B, okay? Let's say trader A is a scalper and the market's coming down like this, boom, we form a trap or we form an order block or we form a demand zone. If you're coming in here, boom, you're pretty much out here. Like you're already made your paycheck. If you're in our prop program, you've made $100 trade times 10, that's $1,000 trade. You get the gist of it, right? To a big money trader that's looking for 10 points on the S&P, or you're looking to capture $1 to make 10R in Forex, like most Forex traders are trading, then what's happening is you need to think differently. Because what's going to happen is, let's say you have a higher time frame chart, okay? The market formed a big demand zone, let's say down here, okay? Big demand zone, let's say on a 4-hour chart or a 60-minute chart. When we get down to this level, if you're trying to target this high way up here, and that's say 20 points from there, the big banks need time to build their position. They're not going to lift the market 20 points in any market, whether that's futures or Forex or crypto or whatever, unless they have time on their side, which means they're going to come in, they're going to change character, come back down, rush the stops, come in, give another change character, fill up, and then pump. Most people don't realize that it's all to do with the order block that was sitting right there. And when you understand that that order block was driving this entire consolidation, it was giving everybody the reason to be in that environment. They don't realize that the objective of the banks were to target this weak high up here, and the order block tells them where that's happening. The trap tells them where that's happening. Most people don't realize that until they sit in a room with some really professional traders that know what the frick's going on, that can give you that information. Okay. So does this make sense to you guys? Is everybody in here understanding this? Give me a yes, that this is kind of like a great precursor. I want to make sure I didn't lose anybody. Okay. Now, rest assured, guys, like I've got some strategy ideas. I've got some strategy concepts here that we're going to talk about. I'm going to show you how we're going to be scalping it in the trading room for futures prop firm. We're going to talk about how to scalp it on the volume charts. We're going to talk about how to scalp it on the higher time frame charts, etc. And then what we're going to do is we're going to first show some examples of some big money levels so that I can accommodate both futures and Forex in here. We're going to talk about it. And would you guys like for me to show the example on, say, crude oil or the Aussie first? Which one would you guys like me to show the example? I'm going to do both, but which one do you want me to show first? Everybody wants crude. I figured that. I knew the question. And then T2 wants NASDAQ. Okay. I don't have all these trades planned out, guys, because this is just the webinar for the launch. And I tried to show some examples. I've got some strategy cheat sheets we're going to talk about here for a second, but let's talk about here. Okay. So this is an example of the concept that I'm going to talk about right now. This is just one strategy that can be used with the Zone software. Now, the reason I wanted to talk about this is because this is a combination between our zoning software and smart money concepts. And it's a topic that many people may or may not have heard of. I know some of you have, some of you haven't. What I'm going to do is I'm going to say that this is not written in stone. This could be the 60-minute, the 5-minute, right? This could be the 60-minute and the 5-minute. It doesn't need to be the 4-hour and the 15. This could be the 30-minute and let's say the 3-minute or the 2-minute. It's really just relative to you as a trader, but I just wanted to give you the framework. And then what we're going to do is I'm going to show you how to do this. So this cheat sheet is going to be available for download. You don't have to worry about missing it when you get the software or when you use it. You'll have access to this, okay? And this document will be handed out, okay? And we'll also give you other documents, because in tomorrow's AMA we're going to talk about other concepts and other strategies. So don't worry, we got you covered. But what I'm going to do is I'm going to show you crude oil for a second, okay? Now I'm just going to go back over to, like, we're sitting down here. Okay. And I just want to kind of go back over to an example of a really, really, really good area for trades that took place when the market tanked from this level. Okay. Over a couple of days ago, July 9th, the market tanked from here. But I want to explain why it tanked from here. This wasn't an accident. This was not an accident why the market tanked from this area and dropped. Okay, there's a reason for it, and I'm going to explain where that happened and why that happened. Okay, so let's just kind of go back to this. Let's just kind of go back to this big push up for a second. Now, some of you may or may not know market structure and swing and control and internal versus external structure. We'll teach that. Big push up. I'm going to draw here, stay on draw mode. So just bear with me here. I'm going to draw this so you can see it. Big impulse down. There was the pullback, impulse down, pullback, came up, pullback, came up, pullback, down. Okay, came up, pullback, pullback, up, pullback, impulse. You guys with me on this? Okay. So this came down, up, pullback. This is a strong high right here. Really, really strong high. So this is a high that's created that pullback. This is the high. This is great. This is a strong low as well at this time. So we'll get into this. Up, pullback, up. This is all internal structures. So at this entire time, even though the market was pumping down, the banks are bullish. Just so you understand that the banks are bullish. They're just adding here. They're just deciding how they want to do this, and et cetera, et cetera. Okay. The banks are bullish because structure is still long. Until they take out this strong low down here, the buyers are still very much in control of the market. As soon as we closed above this candle, right here on this candle here, I just want to draw a little circle here. This was a very important candle. Most people don't know why, and I'm here to teach that, but this no longer made this the strong low. This strong low is not important. This low became the low in control because it was the lowest low from the internal pullback that led to the next break of structure. And so as that happened, that was the strong low. So this entire time in here, we're still bullish, even though they're selling off, even though the market started tanking in here. Most structure traders, supply and demand traders, levels traders, everybody under the sun, they're still thinking like a bull. But that doesn't mean they're going to start building a position to the longs until the smaller time frames give them a reason to do so. And that's where our zoning software comes in and it shows them areas. But I want to show you an example of as soon as they came up, and there was some buying that took place. You can see we had a pretty big rally. It's a 60-minute chart. That's a pretty big rally. There was some levels in there that held and et cetera. I had to pick a trade example to demonstrate a concept. So I'm going to show a short for this example. When the market came down, do you see this candle here? This candle right here is a storyteller. Most people don't know why. My job is to teach it to you. That's a break of structure. That's a break of a strong low. It's a break of a strong low, which means right now at that point in time, we're not in a downtrend, but the banks are going to start thinking like a bear. The banks, the big banks are going to start thinking like a bear. And the reason why is this high had enough liquidity. You got to think about this. The conviction, this candle, this high right here had so much intent behind the institutional money that they drove it through the strong low. But what happens after a break of structure? You're normally going to get some type of a pullback or a corrective move. Well, that's how big money traders think. Smart money is thinking like that. Now, here's our job, okay? This is our job. Our job is to now decide, where do I want to buy or sell chocolate bars? Well, let's go in here and draw this level from the high to the low, right there, right to that candle. And I'm going to draw a little line on the storyteller bar. The storyteller bar is there. Now, this is a decision chart. You don't see any software on this chart, do you? You don't see me using any zones here. Why? Because I'm going to show you how to trade like a big bank for this example. And then we'll tell you how to scalp in tomorrow's AMA, and we'll tell you how to scalp in our prop trader programs. But I wanted to show some examples that can show you some really huge trades. Okay. This is a multi-time frame concept. You'll see here, I showed you an example of a higher time frame chart. For this example, I'm using a 1 hour just to demonstrate a concept for more day trading, right? But let's go into the 5-minute chart now. Let's just go up here for a second. I've only got the cells turned on. I've only got the cells turned on. I see resistance only on purpose because I'm thinking like a seller, right? I'm thinking like a seller. And what I want to do is I want to draw a little line in the sand right here. Right there. Now let's just kind of spin this out a little bit. Let's just spin this out a little bit. Right there. At that line, the 50% line, this green line right here, this is the difference between buying chocolate bars at $1 and selling them for $2. Anything above that 50% is where the market starts getting expensive. Anything up here is where the market starts getting very expensive, right? And at that time, at this time, any of these zones down here, we don't want to touch them. We just don't touch them. There's no need, because that's not our job. Our job is not to be selling when we should be thinking that's when chocolate bars are cheap. We want to sell things expensive. So the areas of interest for me are going to be zones that are created, okay, here. This is the first zone that I'd be talking about. This is the second. Okay, and this is the third. Now, what I'm going to do is I'm going to say up here, you're going to see I've got all of them turned on. Let's just turn them off for a second. Let's just turn them off. Where the heck do you know where the supply is? Where do you know that the traps are? Where do you know that the imbalances are, the order blocks? You can't. You can start looking through all the candles and maybe it's been tested, maybe it hasn't, et cetera, right? That's the whole point of the software. My job is to teach you strategy and how to use the software to your advantage. But if I can show you how to use it in context to the location, in context to the story, in context to reason, this is how you build a thesis around big money trading. Tomorrow we'll teach you how to scalp for 4 ticks. No worry, we'll show you how to get there. Okay. But let me give you an example. Let's go back. Let's turn on the supply levels. Just supply. Okay. There was no supply zones up here. Do you see that? None that I could trade. These were all tested here, tested. Do you see how that, like, if you were just supply and demand trading and you're just a supply or demand trader, you don't have a level. So this is the whole point of me going back and recalculating and just showing you, if this was a volume zone chart, these zones would take forever to load. Okay. So if I go in here and turn on order blocks, where are the order blocks? Now we got some big money areas. Now I want you to pay attention to something. If you notice, this order block's never been traded into here. This order block is 100% clean, never been touched. If you pay attention to that, these order blocks have already lost their edge. This is not a tradable zone. So what I'd like to do, and these are the things we'll teach you in the AMAs, and these are the things we're going to teach you. We're going to do some strategy classes on it. We're going to do some videos on YouTube. We're going to do some deep dive training. I'm just going to draw a little box here like this, okay? Are you guys following why I'm doing this? I'm trying to teach you guys as well as give you concepts. Now what I'm going to do is I'm going to go and turn on the traps. Let's go and see if there's a trap above us. And I guess my drawing tools didn't stay, so let's just do another draw tool. There was the order block. And this is the trap. Okay. Now, do you notice something here? This trap was traded into. So here's the concept around these two candles, these two zones here above us. These two at the top, liquidity has been used up to some degree. Does that mean the market's not going to respect them? No, it just means that you want to go back to deciding who you are as a trader. And remember what I said, are you going to be an aggressive or a confirmation entry person? Anybody that's taking aggressive entries should only ever do so in fresh levels that have never been traded into. However, if you're somebody that's willing to say, okay, if the bank's going to respect any of these levels, but I know that we've traded into them before, that doesn't mean that these are no good. It just means I'm not going to enter and be an idiot and get run over if they fail. I'm going to go into a smaller time frame and wait for a chalk change of character to let me know that the market is sold off in there and actually giving me a change of structure. Does this make sense? This one here, a different story. That's first touch gotten written all over it. Why? Because it's fresh. And take a look at what happened. As soon as the market opened the next day, pumped straight up into it. There it is, right into that order block, right into retail on the right side of the higher time frame chart. And there goes the drop on crude. Now that's a big trade for crude traders, guys. I don't care what anybody says, going from 103.60 all the way down to 101.80. That's almost a $2 move. Now the job of this rotation is to come back down to this pivot. Okay. So you can scale out any way you want. My job is to tell you why that's a really high probability trade. Now, the other side of it is, if we're going to take these two trades up here, okay, remember the higher time frame is bearish. We're looking for sell side liquidity. We're on the right side of the market in higher time frame areas in expensive locations. The only issue is these traps and order blocks and imbalance areas have been traded into. So when I get up there, when I get back up there, okay, you had a reaction. You see how there was a reaction out of it? Okay, had a reaction, but it's not where you get a reaction out of it. But that doesn't necessarily mean that's where the big money's stepping in. People are like, well, isn't that big money that moved $1? To a retail trader, yes, but $1 move on crude is nothing to an institution. Right. And so what you want to start thinking about is, okay, are you going to start putting on a big trade here? Or do you want to let the market come back up into areas where they're going to build more size? Because that's exactly what they're doing. They're building size here. And let's go into, say, a 1 minute chart. And what we do what we do here is we just look at what took place in this level. I'm going to draw here. This came all the way up into this area, took out the structure. It broke structure, came down, boom, repeated up in here, and then dropped. And this is difficult to see to a retail trader because it's considered smart money for a reason. It's because it's where the smart money is building their trades and their positions, right? But look what ended up happening from that location. Okay, do you understand how this happened here? Do you see that, guys? Like, do you see where the smart money comes into this level like this and drops? There's a reason. Okay, now this retest is them retesting the chalk. Now, I don't like trading on the 1 minute. I personally don't. So I'm going to wait for this change of character right here on the 5 minute because you can see it a little easier. You're going to miss trades sometimes if you do it, but look what happened here. Market came up, came down, came up, came down, came up, came down, came up, pull back, came down, broke the structure. Change of character coming out of this level, okay? Change of character from that level. They retested it. Look at the retest. This is what I'm going to be teaching in some advanced AMAs so that you don't got to figure you got to get it all done in one day. Trust me, I'm not going to leave you hanging. This is smart money on confirmation entries. This was a really sexy short from a retail trader's perspective. This is a really aggressive first touch entry, okay? Because it's already been used up. We didn't get the change of character here properly. So then this is where the smart money give the break of character, retest, and this is where the big money is going to drop the market on the retest down. They did 2 retests in that area, if you can see it. Now, why is this important to you? Well, it may not be. It may not be to somebody that's not looking to capture that type of a move, right? Because most day traders and scalpers aren't trading crude that way. If you're a Forex trader, you're going to be doing that on the Aussie dollar. I'll give you an example of an Aussie dollar trade. This happened the same thing here. There's the 30-minute high, the break of structure candle that's here. I'll make it a little faster, and then we'll talk about some scalps for all of you day traders and future scalpers in here. There's the Aussie dollar, clear downtrend, pumped up, broke structure on this candle. That's the storyteller bar. Wrap your grid, high to low, expensive. I want to know, where can I be selling? Right here. Let's go in and find the traps. Let's go in here, turn off all of the demand zones. We're looking for sells, support only, resistance. This is where the software is really your best friend. Let's go back over here. And if we're sitting down here in the lows, I know that's my threshold, right? I know that's my threshold. I know that I'm able to come up and take shorts in this area. And if I want to, I have them all turned on so you can see these are all traps, imbalances, or order blocks above me. Either way, take a look at this level. This was never traded into since we came to it. Let's wait for it, let's wait for it, let's wait for it. Boom. Right on the right side of the higher time frame, right on the right side of retail, right on the right side of an order block. That was a trap, actually. That wasn't an order block. That was a trap. That was a liquidity grab, and that was a trap. Does everybody see the power of being on the right side of the market in the right environments? Now, I'm not going to say every trade is going to look like this, but what I will tell you is that when you understand how to take big picture analysis, okay, and bring it down, that's a 15-minute trap level. That's a 15-minute zone. So to a day trader, you might say, well, that's not a big level. Well, it is when the zone is only 5 ticks on a 15-minute level. That's a pretty important area. Your risk was 5 ticks, and the job of that swing high is to take out this low. The job of this high is to take out that low. Okay. Now I'm going to be doing some strategy sessions on smart money concepts, and trader stops as well. You can trade most of these smart money traders that are doing these types of big R multiple trades. You're risking $1 to at least trade for 10, like realistically, because you're able to once you understand that, but it does take a little longer to learn. It does take a little longer to learn. So when you understand the R multiples of these big money traders, you can be wrong a little bit more, but when you catch your trades, it's worth it. It's really, really worth it, right? Now, that doesn't really necessarily mean that everybody in here is going to be looking for those big moves. So let's go down here and give an example. of how you could leverage, okay, how you could leverage, let's say, an order block from this morning. Okay, let's go take a look at an order block here. I'm going to put the zigzags on here for a second. Go put on some tested levels and some broken levels, okay? So as a scalper, okay, where did the market open? I'm on the wrong time zone, by the way. I gotta remember the market opened here. I'm on a completely different time zone, so I apologize because I'm in Europe, guys, and you know, it's 10:30 at night, so my clock automatically adjusts to right, to that area. So I've only got order blocks turned on, but from a scalper's perspective, what I want to do is I want to teach you a very, very simple concept. Okay, it's called a break of structure retest. So on a smaller time frame scalp, and we're going to talk about this in tomorrow's AMA, okay, we're going to look at a break of structure scalp. Only trade directional on first zone after the break. Okay, you can also map the 50% grid on the impulse leg. And I'm going to teach this, guys. I wasn't planning on doing too much strategy in today's event, but what I will do is, yeah, Mosh, this is live charts. I haven't connected to live data. This is the S&P today. So this is live right now. Okay, this is live right now on the S&P. Okay, so I always look at live charts and we trade them in our room and all that stuff, but this is a webinar to teach a concept. Okay, so I want you to understand a few things. If the market's coming down, as a day trader, market's trading down. Okay, well, you can trade short in that environment, but what if the market decides to do this? Boom, change of character. At that point in time, as a day trader, right? Yeah, no, I didn't mean that, Mosh. I just mean tomorrow we're doing another AMA, right? We're doing another AMA on strategy, so we'll be doing it during midday, right? Midday environment. So we're going to be doing live charts, scalping. We got you covered on that, brother. Okay. So when we do this and you have a break of character like this or a break of structure, one of the things you want to understand is that just because the market was trading short here for the morning doesn't mean that you don't have to be a buyer as an intraday scalper. So I'll give you an example. Market's coming down like this. Okay, and I have all zones on here for a reason, because I want to show you the past levels so you can see resistance and support. So if the market's coming down, there was an order block level, because it's an order block chart. So this is going down. Okay, you can sell this level because you're with structure, right? Come back down as a nice scalp. Would not buy that. You're not with structure. There was an order block trade right here. So I'll just show you these areas here. This is a scalp with structure on an order block. You're with the direction. You can take that order block bounce trade, drop it, right? Wait for another one. There is another short right here on the up wick on that order block, right? These are not supply and demand trades. These are order block trades, okay? Different levels completely, okay? And then all of a sudden, these levels are tested. There was an area, okay? This one failed, okay? It's going to happen eventually. Then the market shifts. You're going to wait for a close above structure. So if I had a demand zone from here to here, this entire leg, what you can do is you can then say, okay, I could look for a demand zone in this leg or an order block level, 50% or less if you choose to be even more conservative, just looking for an order block in that environment. I don't have one. Let's continue on. Broke down, no supply. And there's no order blocks in any here, nothing. There was an order block, but here's the problem. We're on the wrong side of the market. And this is the whole point of looking at structure and just making sure if this changed structure, okay, before that candle retest, you would have a trade. Leave it. Good reaction, but it doesn't meet the criteria. You could trade a retest if you choose to. It's your call. Okay, it's your call. Here it is. This level here failed. There's a short break of structure retest. Okay, right in here in demand, came back to retest this. The other thing too you want to understand is, are you wanting to trade both sides of the market? Are you a long trader or a short trader? These types of things. Let's wait for another break of structure. I'll show you another concept. There's a clean break of structure right here. Take a look at this level. Clean break of structure. Retest into it. Scalp out of it. You don't need a huge trade out of it, just a reaction. Coming back down. Let's wait for another level. Take a look at this one. Now, this is counter trend, right? You can trade anything, Lee. It's just this as a scalper, like take a look at this. This would be counter trend. But I want you to take a second and take a look at where we are on the retracement of that leg. We're down in deep retail on that order block. Okay. This is why I look at where is the impulses right now. The impulses are pushing up. So what you can do on every impulse leg, and what I would do is this is ultimately another example of adding strategy to concepts. But let's just map the impulse. That's an impulse, right? That's an impulse. That's an impulse. Bigger legs pushing to the upside than the downside, right? So if we were to say map out every single impulse leg as a scalper and do 50% grids on the impulse legs, this is something that, is very, very useful. There's 50%. Well, there's no order block. 50% leg, there's the retest. 50% leg, there's the retest. Every time we got below 50 on the retest on an order block as a day trader, big trades happen. Okay, there's no impulse. We never cleared the highs. You see this, guys? So this is an example of trading order blocks in deep value as a day trader. As a day trader, those are big trades. As a scalper, those are huge trades. Huge trades. This is a 5-minute chart. Okay, let's take a look at supply and demand. Let's use a different example. So let's go into supply and demand. Like you can see, remember, this has got 4 different systems in here, and we'll go over the higher time frame charts from the trade room in an environment. Let's take a look at this, okay? Different trade examples. As soon as we broke structure to the impulse, normally what I'll do is I will wait for the change of character to measure the legs. So I'll give you an example. Change of character, okay? Pulled back to demand, lifted out. However, even if you weren't taking that trade and you measured the impulse, okay, as soon as we had a change of character up here, you're going into the correction. As soon as we took out this environment, what you do is you measure the grid on the impulse. As a day trader, that's all you do. You're trading the last leg. That's all you're doing. Came right down, tested that demand. Big trade. No impulse until it clears the highs. Okay, so here's what you do. As soon as it takes out the highs here, you're in an impulse. So what you do, as soon as you clear that high, you now know you're in an impulse leg. Let's go back and take a look at broken levels. Okay, as soon as we come back down to the low and the high of the pullback, let's wait for it. There it is. Take a look at this. Is the exact same pattern. It's just repeating itself. One pull back. There's the impulse here. Wait for it. I'll show you exactly where the change of character retest is right here. It's going to pull back, push up, and then come back down. Now wait until I map out the 50% grid. Here it is, to the high, to the low. Where is this demand zone? Where was this demand zone? This demand zone retest was below 50 in the impulse leg. This demand zone is below 50 in the impulse leg. They come back down, give a huge trade. Just different areas, right? Just different levels to look at. I can even show a different chart. We could show a different chart on a different day, just so we could just take a look. Okay. So let's just take a look at an impulse leg. Here's an example. I'm going to turn supply off or resistance only to just measure an impulse leg. You can see it. So in this environment, this structure changed down, broken impulse leg. So as soon as we come back, we give the change of character. What I'm looking for is I'm looking for a break of structure that comes up, it gives a change of character. So that as soon as that change of character happens, I'm going to measure the grid from the last impulse. This is another way you can apply strategy as a scalper, the same way that the multi-time frame traders are doing it. You measure the high to the low of the impulse to the downside, and you trade in retail. Wait for it. There was a trade here, but it's not in retail. This retest is not in retail. This is internal structure. Market comes up. Okay. Came into this level here, pushed into it, dropped out. This level here was tested a little bit, but this level here gave another impulse. And this is what we call a liquidity trap. Right in here, traps right above the highs into supply. Okay, so and the other thing too is one of the things I want to show you on this is that you need to decide, go into this document, you need to decide what your level of comfort is on levels trading. Do you guys mostly take counter trend or directional trades? How many of you guys are more aggressive versus conservative? Let me know what your risk tolerance is. Some traders have a hard time going counter trend, right? Some traders want to go with trend. Anybody here prefer direction over non-direction? Because the concept here would be counter trend. And I know a lot of times in our trading room, when we talk about it, we don't trade counter trend off the levels. We just don't, even if it makes sense. Yeah, exactly. Exactly. And so here's an example of really, really great trades working with trend. Like when you see with trend trades versus against trend trades. I can turn on the other zones here to kind of show you an example, show you both. You can see the difference. And most people don't. Most people don't is I don't personally, and I'll just kind of show you an example for myself. I don't normally like to have a trade where if I have a direction, let's say I'm coming down, boom, breaks. If this like creates a zone right here and I'm just right trading, I don't normally do that. Because what I like to do is I like to wait for zones that are little bit down and let the market come back. It's just me. If you understand the direction of the market, I'll show you an example of this, right? If we're coming down and we change the character here, okay, you'll see we had a level of supply. It breaks through and you see there's a demand zone. Now this demand zone pumped out of that area. It just broke. You have a lot of room to trade up and then back down, right? It comes back down and pumps out. Now this demand zone, you see the difference? This demand zone did not leave the area very strongly, did not give an impulse out of the breakout very strongly. To take an entry here is not really my cup of tea. I'm not interested in that. I would rather wait for the next break up. Let's wait for another example. Give you an example here. Take a look at this. This is a great example of a break up. Huge impulse up. Okay. Came back down, pumped out. Now, what is the difference between this demand zone push on the impulse versus this consolidation area? We had no leg out. We had no big impulse out. And so these are the things that you need to, we're going to teach you when it comes to strategy, when it comes to understanding intraday scalping versus big money concepts. Like I think sometimes in these webinars, and I like, you know, I was having a meeting with Jim are you guys learning anything? I guess that's the most part is, have you guys learned anything from this event so far? I think that's the most important question to ask. When we talk about strategy, okay, there is 100 different ways we can teach you supply and demand and levels trading. What I want to do is I want to bring it back down to, this is like you're going camping, and if you had one tool that you could bring with you, which one serves everything, right? So what I'm going to do is I'm going to go back to this document for a second. Everything that I'm doing that maps out probability has to do with this. So I could teach you the big money trades on the Aussie dollar for huge, huge R multiples. I could teach you the scalp trades on crude oil, depending on which direction, whether you want to be counter trend or direction, right? But we first need to nail down who you are. And I think what we should be doing as a group and as a community is that, would you guys like for me to host a different event for me to cover, you know, say AMA on smart money concepts, where we do big, big trades and we just focus on that? And then the next event will be on scalping intraday directional trades and only trading 1 minute time or one time frame at a time. Because what I'd like to do with everybody here is I'd like to create a bunch of AMAs so that we can do some videos. And then what we can do is that you guys have like a video library of each of the different strategies so that everybody can learn every one of them. And you can focus on the one that you like the best. Right. And like I said, for everybody in here that's in the prop program, like we haven't even talked about how we could be trading these as levels, let alone as areas of interest. Because I know a lot of my prop traders in here that are trading in our prop program, like they're going to look at an area, and if they got a trend line going into a trend line break going into a resistance level, they're not going to take that trade. They use it completely different than, say, someone that's using it for an entry tool. So I just want you to know that the whole objective of today is to kind of take this document and let you know that we're going to expand on that. Okay. Yeah, and that's the whole point. My whole point today was to give you guys the context that you guys can see that, wow, like I could trade for 10R multiples if I wanted to. I could scalp for 5 ticks if I wanted to. I can trade higher time frames using them as filters like our prop traders want to. But I'm not going to just expect you to learn it all in one webinar. And I know Jim and I were talking when we were prepping the demos, we're going to give a little bit of each. We're going to talk a little bit of each of these different concepts, show some really, really great environments. But my job is to take it and break it down into sizable strategy sessions where you guys could have like a video library of different trading systems using the software. And what we'll do for each of those events is we'll put them in the members area. We'll have everybody in there asking questions. You guys can all be a part of it. And then you'll have those videos to lean on. You'll have those strategy sessions where you could do Q&A and we could do examples. Give me a yes if that makes sense. Because I don't want to just cater to our prop traders, because there's like a lot of prop traders in here that are going to learn it anyways the way they trade it. But it's for everybody else in here that is right, new and stuff like that. Yeah, no problem, Swan. You're going to get an email, right? Yeah, you're going to get an email. Okay. So like I can give you an on the fly. Let's give me an on the fly. Let's use Forex for an example, because, you know, futures is not meant for really, really big swing. I'm going to use Forex, or you know what? We'll do an example. Give me one Forex market and one futures market. We'll do Forex first. Give me a Forex market. Which Forex one you want? I have a list here. This is all the list I have data for. So if you see something here, I've got the Euro Swiss, Euro dollar. All right, let's take a look at the Euro dollar. I'm going to open this up. Loading charts. Give it a second, guys. I was going to load the Euro dollar just to, you guys, give me a little bit of an understanding. Okay. Give it a second to load, and bear with it as it loads. It's got to load the data. It's got to load 3 different time frames, and it's loading all the software on the back end. And it's loading bigger charts. This is big level trading. We'll give it a second to load. And for those of you that want to look at an example for, let's say, there it is, Euro dollars. We'll go over an example. Okay. So what I'm going to do is I'm going to just tell you a little bit about the 4-hour chart. This is a great example of taking what I've just shown you. I'm going to draw the swings just so you can see it just real quickly. I'm going to do this fast so you guys can understand it. So there was an impulse. Okay, I got straight in draw mode. We're going to do this quickly. So here it is. Pull back. Pull back. Pull back. Pull back. Didn't have a pullback to this is the highest. This is the lowest low in that pullback. There's the low. Here's the retest of those low. Couldn't break those lows. And we're in internal structure right now. So we are bearish right now. This is an internal push higher, but we're definitely bearish. So what I'll be doing in this environment is after they pulled back, this is how you map out smart money levels. And this can be done on futures and Forex. The only difference is the time horizon for Forex traders normally lasts a little longer than futures. So that's why I think it's really good to know the difference. So let's just kind of go, the pullback started here, right there. So that's where the pullback started. So from this moment of time on this leg, what I would do is I would map out retail to wholesale. I would just literally just go down and I would say, okay, there's the last impulse leg, right? And let's just bring it down. That's the grid mark. So I'm allowed to sell anything above it. I don't even need to look at where it goes. I just want to go into the 15-minute chart. Okay, so we're just going to go to, and this is where you get a chance to trade as a day trader. Right, you get a trade as a day trader, and you can see this level. Okay, you can see the 50% level it tested here. I just want to go in and take a look at some broken zones for a second. Holy moly, there it is. Right as soon as we get to this level. Now, what you can also understand here is that this wasn't fresh. This wasn't fresh. So a lot of traders that are very, very disciplined won't take the trade. I know a lot of inexperienced traders that'll get used to it, and Sam, they're going to start taking aggressive trades. I wouldn't. I would be more inclined to take this level here on the aggression if I was to first touch this level, because guess what? There's always a chance to take a better trade above us. So the market came back up, and take a look at the drop down from that level. When you're on the right side of the big picture, you can see that this was a trap. This was a trap zone. Yeah, that was a trap. So what you can do is you can turn off all the levels, and you can see for yourself a blank chart, just so you understand. Let's go and turn on supply and demand. There was a supply zone right here. Okay, so you can see the supply zones here, but that trap wasn't there. And they came where? Why did they come here with the wick? Like, what does this wick even mean? Let's take a look. Like, why did they stop it there? Like, is there a reason for that wick to cause the huge drop in the euro? Take a look where they dropped it again. The difference between this trade here, okay, the difference between this trade here and this trap trade that's, let's take order blocks and traps. The difference between the first level and the second test is that the first level was already tested. So what I would normally, when you understand the job of the structure, the job of any level that's holding here is to take out this low. You'll notice how they came down. They couldn't take that low out. They attempted. So they pumped higher up into retail. The next job, if this level holds, is to take out that low. So what I'd be doing in these situations like this, if I was to trade any of these big money trades, is I would scale out, especially as a futures trader. If you're trying to do this on futures, I'll give you an example of a risk reward scenario where you can take this trade like this. My furthest target is going to be always at the swing low. So my furthest target is always going to be at the swing low. So you can see here that even on this trade alone, you're risking this much to gain all the way down to the low. Does that mean you need to hold on for that big trade? No, you don't. You don't mess around with all the diddling in the middle garbage down here, even though the software is going to give it to you. My job is to show you some kick-ass areas to take some really big trades. But if you weren't and you're disciplined and you said, I'm going to wait for the next trade, it's fresh levels never tested right there. There's the trade. It already hit T1. It's on its way to T2. And this is live markets. Because that was the test. That was the fresh level that happened over here that wasn't a trap. Remember we said this was the trap. This was the trap that got tested. It was already tested here. This was a liquidity grab. See what they did? They flushed the highs, went right into a fresh level of imbalance in retail on the right side of the higher time frame. And the job of that level is now to attack the lows that couldn't break down. Now that's a smart money trade. That's a smart money concept, and you're already up 2R on that trade. Okay. So if you were to take this trade, where would the targets be on this? This is a great example of just mapping out a live Forex trade. Your targets need to be aligned with the swing low. There it is. See that? So this is a really big trade, and it's on its way to 2R right now. So, you know, this is something that's live, right? And you can see that. From a futures perspective, right? From a futures perspective, we can take a look here. And let me do the NASDAQ for a second. I'm going to take a look at the NASDAQ NQ. I'm just going to look at the NQ for a second. We're going to load the NQ on some order block trades. I'm going to load the NQ. I haven't even looked at the NQ, guys, just a precursor. Like I haven't looked at the NQ, haven't done any of that, right? And what I'm going to do is I'm going to just let it load, and haven't loaded the NQ, so it's loading all that data. Bear with me, guys. If it doesn't load, then it's because Ninja's giving me some issues, and we'll just call it a day on that, because I don't want to waste everybody's time on data that's not loading, because we can always cover that in the AMA mañana, right? But yeah. So your risk stop loss is based on your target takeout of the weak highs and lows. Yeah, for the big trades it is. Yeah, because I'm targeting the swing lows that are failing. Yeah, I'm targeting the weak highs and lows, right? So I'll give you an example. I'm going to load a new chart. And I'm just going to load the NQ for a second because this is not loading for whatever reason. It might be just the time of day. And let's just load this. Let's try and load one more chart, and a new one. Let's go to a volume. We're going to load a 6,000 volume chart. Let's just load the last 2 days. I don't need to be scalping 5 days back. Okay. And let's just go down here and find an example, order blocks. So if this doesn't load, guys, then the NASDAQ's giving me a hard time. So I apologize. This works on any market, any time frame. It just depends on your strategy. Like we're going to be teaching strategy, and it seems like the NQ doesn't want to play well with me today. So that's just, I apologize, guys, because data takes what it is to load. Okay. In the meantime, have you learned something from this event? Have you taken anything out of it? Have you guys found this to be useful and effective? While this is loading, guys, why don't I leverage the time to give away a free license? I'm sure somebody in here would like to get a free version of the software. So what I'll do is I'm going to go in here and run a poll. Okay, give me a second here. There wasn't a poll ready. So let me just do this here. I'm going to run a poll here, guys. Bear with me. Okay. Free giveaway. Give me a second, guys. I'm just going to write. I need to make sure I put this here. Bear with me, guys, because I'm just going to set up a poll and do this for you guys. Okay, bear with me, guys. We're going to let that NASDAQ load anyways. Okay, save that. I'm going to run this poll. Anybody here want a free version of the software? Now is your time. Okay. Let me know, guys. I need to know because we're going to put you in the randomizer 2000 and get you guys a free license. Whoever is one lucky winner will get picked. We always give it away. We always announce the winner. So please, we'll do our best to help you out. Okay. Let everybody answer here. Give everybody a moment. So let me just get this out, guys. Give me a second and everybody's answered here. We got almost everybody's answering. And give me 1 second here. Excellent. Okay, perfect. So we've got a whole whackload of you guys have, we've only got 2/3 of you who have participated. So that means 1/3 of you doesn't want a free license. If you can't answer the poll, no problem, guys, but I've given you time to answer. So anybody here that did not answer, hopefully you did. Going once, going twice, and that's it. So if you're not there, you're not there, guys. So hopefully you guys took advantage of that. Okay, let's take a look here and see if Let's take a look here and see if the data, look at the NASDAQ, decide to play well here. Look at that. Okay. So I just kind of want to talk a little bit about the NQ for a second, okay? And we're going to put the zigzags on just so you guys can see some structure changes. And we're going to just basically do this and make it a little bit easier to see. There it is. So can everybody see the chart here? I'm just using this on the fly random example of the NASDAQ because I didn't even look at the NQ today and I definitely didn't trade it today. So big, huge flush. That was a CPI flush. So I'm assuming that's the morning, right? And that candle was CPI. And what I'm looking at here is, let's just take a look at some order blocks. I think it's the sexy name on the street. Let's take a look at order blocks. Okay. So as a retail trader, as a scalper, the easiest way to take this out of the gates is to trade direction on any time frame and just wait for clear structure breaks and take an order block trade that makes sense. If you're just looking to scalp a couple ticks, like I know a lot of traders in here are just looking to scalp 1 point on the S&P, get funded, stay funded, or they're just looking to try to make a couple dollars or $100 or $1,000, whatever the case may be. If you're somebody that's like a scalper and you like the NQ or the MNQ, you could trade the MNQ, but this is the NQ for an example. We could look at the MNQ as well. Actually, you know what? It might have been better to use the MNQ. It trades more volume, but actually, you know what? Let's see if I can get that loaded. I'd rather use a better example, guys, just because it it'll give better trades. It'll give better trades, right? I really think, you know, loading a chart that makes sense is, you know, if you're going to trade the NQ, most people aren't trading the full size contract. So I think, would you guys agree with that? Most of you guys are trading the micro NQ. Yeah, absolutely. So we'll give it a second to load. Okay. And while it's loading, while we're waiting for it to load, okay, what we're going to do here is I'm just going to show you an example here. As the market cleared the structure, I'm just going to draw little levels here. As we got to close above the structure, what you can do is you can look for an order block. That was a flip zone. We took out, it's called a sweep flip, is where you take out a structure high and you form an order block and you push down. Look at that. Look at the retest on that level. That's enough to take a 1-to-1 trade out of the NQ. Like, do you see this here? Take a look at this. Risk reward on that trade from there to there gave you 2-to-1 on that trade. Let's keep going. Let's wait for the next structure break. Look at this. We had another order block in here. It just didn't give a new level. Okay. We can try and put broken zones here. Yeah. This was a level on a level. Okay. It came right back down into this area. Wick through. Obviously, if you're going to trade a level like this, you'd put your stop below the lower level. It just makes a little bit more sense clearly to just take the entry here. This was the entry here. It pumped all the way up here. Gave you 2-to-1 on that trade. These are the NASDAQ trades. You're with direction, order block trades. I wouldn't touch this one. Why? We never broke structure coming into it. Yeah, MNQ. Yeah, well, the NQ is terrible volume. Actually, it's got half the volume as the MNQ, right? So I wouldn't touch that. Wouldn't touch this. Now that we broke structure here, do you see how we broke structure? Coming back for a retest, yes. What I would do on a retest level is I would look to see where they traded before, just to see, or what I would do is I would take 50% of the grid. And you'll see that that right below was 50%. We never did come back down to it. Let's wait for it. Not selling this, we were not on the right side of structure. We close? Yes, we did, we closed. So as a scalper, if your job is to just trade structure levels, right? That was a structure break to the downside. This was an order block trade. As a scalper, these are just trades that you could just easily take out on the opportunities. Risk reward on that stop. I would put my stop above both highs. So can we get a trade? There it is. Came almost to 2-to-1. This was another trade here. Let's go back up to this one. This was a clear break of structure. Stop will go above this. May not have got down on that. You would have got stopped on that one. It's going to happen. You got 2-to-1, 2-to-1, 1.5-to-1 stop out. That's fine. I wouldn't touch this one because it's trading an impulse leg and there's no ascertainment of structure. Could you trade it on the way back down? Yes, especially if you're able to see if there's a 50% retracement on that leg. It's a good area. Now this is counter trend. You see how it broke structure coming into this? I would not trade these demands or these supply because there's no reason to do so. I would not touch this even though it worked because it's counter trend. If you're a counter trend trader, well, then you can see if that's in your risk plan. Does this make sense? You can see if it's in your risk plan. Okay. So guys, I'm not getting the MNQ loaded, but I think I've done a good enough job. We've almost had a 2-hour event. I hope you guys found this to be an informative event. And what would you say? Yeah, say coming into this, I would not trade coming into this, meaning I would not trade the market coming down into this. We broke structure. So this is now counter trend. It's very, very aggressive. It's very dangerous, especially on the NASDAQ. NASDAQ's a big boy market. Okay, now here's my promise, guys. It takes time to do these AMAs. Okay, it does take time to do these AMAs. I do my best to work with everybody on my team, and I will do my best to help my my educators, teach them in the classrooms. We've got this tool that's absolutely fantastic, and it's 4 systems in one. It's 4 systems in one, and really the whole concept of today was I could show you strategy after strategy after strategy with this software, because it's not just looking at 1 levels, it's looking at 4, and it could be used for big bank trading. It could be a small bank trading. It could be scalping. It could be filter. It could be entry. It could be just location, everything. And what we're going to do is we're going to break it down. I'm going to break it down. I'm going to delete this because it's just not giving me any love. And I'm just make sure you guys got a screenshot of this. Okay, got a screenshot of this. And I'm going to give you this when you guys log into the members area. You'll have access to this. This is a breakdown of the higher time frame big money trades, which you're going to need some assistance. I understand that. We're going to help you with it. We'll do another class on it. Tomorrow, we're going to be most likely using it with our prop trader program. We're inviting everybody in for the AMA to cover that. Even if you're not in there, you're getting a guest pass, which is a very big benefit to you, because normally it's a closed group of prop traders that we're doing that with, but we've opened it up to everybody just for the launch. Okay. And so you'll get access to all of this. Okay. You'll access to all of this. So there's the webinar invite. I think, Roy, you've got that covered. So what I want to do, guys, is I'm going to open it up. I'm going to explain pricing just so you guys understand what we're doing here. And then everybody, yeah, Paul, don't worry about my timeframes. This is just a webinar in here. I'll give you the time frame. We have a fractal conversion document we can give you in the AMA tomorrow, and we can send it out if you're not able to make it, which converts all the time frames to volume, range, and Ranko charts. Right? We can give you that as well. Not a problem. Yeah. So yeah, and it's easy. It's a document that we built. Roy, maybe you can you know, if anybody wants that document, just come tomorrow to the AMA and we'll get that ready for everybody. So let's go over pricing, guys. I think I've hit my mark on this. This is the Swiss Army knife of zoning software. It's probably one of the biggest tools we've ever built when it comes to levels trading. And it's 4 systems in one. Okay. We're giving 50% off of the launch. We've arranged for free giveaways, and we've arranged for the prop program to be purchasing inside the website. So if you are in the prop program, you can purchase in the website. Your information is there. If you're not in the prop program and you're in other members or in their list and et cetera, then all you need to do is just use the link. Roy, you can post that link in here now. And it comes with updates, documentation, video training. You'll be able to get a guy on our team to Mr. Ben. He's fantastic. He can install the software for you. And we've built workspaces. So the workspace that I'm using in the demonstration today, we'll give it to you. But what I'm going to be doing ongoing, and what this is we're going to be doing classes. So we're going to do an AMA tomorrow. And then what we're going to do, Roy, if you're on the mic, you can speak and introduce yourself. He's one of our instructors for the prop program.
Hello. Hello.
Roy, hey, Roy. What we're going to do is we're going to set up some AMAs for the entire database of users on this. and we'll cover the strategies, because I think what's going to do is we'll break it down one at a time, and we'll work with our traders on each of the order blocks, the supply and demand, the structure, the higher time frame, smaller time frame, because it does take a little bit of training.
Sure.
But my objective is, for those of you that want to use it right out the gates, get you using it from a scalping perspective or from a multi-time frame perspective right away. And then we can spend more time teaching more advanced concepts and even simple concepts, right? So what I'm going to do is I'm going to put a poll in here, guys. It's definitely getting late for me. So I'm going to put a poll, and let me know if we want to be able to help you. Yeah, Lee, we'll be scalping zones. Yeah, we'll be scalping zones. It just takes time for us to get set up. So let me launch this poll, guys, because I want to know if you're ready to rock and roll here. My team needs help with installations. We also need to plan for the AMAs. We also want to be able to plan for setting up the additional events and stuff. I need to know how many people is getting involved with us, because if I know how many people is getting involved, we can plan accordingly. We can set the dates, and we can get everybody ready to go. And I understand if you're still on the fence, you got lots of questions, let my team answer them for you, because we're not here to just send you some tool and you got to figure it out on your own. Anybody in here that's in the prop program, I strongly encourage that you move on this, because it's going to be in the room every day now. And it's something that's a primary aspect of what we're trading. So make sure that you take advantage of that in the back end. And for those of you that are not in the prop program, then we'll be working with you on the AMAs, the outside AMAs. All of the prop traders will get extra AMAs. It's part of our program. Yeah. So I'll open up to Q&A, guys. Now we'll give it some time for Q&A. And that way we can go over that detail. So answer the poll, guys, and I'll answer some Q&A. He can be, Thomas. He can be, if you guys want him to. What I'll do is I will make sure that Gilbert gets the tool sets, gets trained on it. Yeah, no, he's a great trader, and he knows supply and demand very well. The only difference is this is not supply and demand. Supply and demand is one of the 4 systems. Yeah, no, we don't develop on those platforms, Steve. They're just too old, and they're just, in our opinion, they're just not good platforms. And unfortunately, they just, coding on them is not fun. It's not friendly, and they're outdated. No offense if you're using them. I apologize. I'm not trying to offend you, but to really active traders that are trading futures and Forex, and it's just really hard to develop really advanced tool sets on really old clunky platforms. Yeah. TradeStation and Thinkorswim, they're just behind the curve on development enhancement. Yeah. Great execution tools, great brokerages. Yeah. Lee, we'll be posting that probably tomorrow, but even if you do win, Lee, we'll always refund you. Yeah, we had that happen once where the winner was refunded. It's not an issue. If you want to get it and get going with it. So I need to know where you're at, guys. Only 30% of you have answered the poll. I get it. You're either using the links or you're tired. I've bored you to death. Help me out here. Answer the poll. Win, lose, or draw. Either way. I just want to be able to help you get the answers that you need. And then my team will reach out to you. Please note that my team, Jim, and my team are going to be contacting you. So just pick up the phone, reply to the email, listen to the text. You're requesting us to contact you. We're not going to contact you if you didn't ask for it. Yeah, if you're using Ninja, then absolutely. We just can't develop on those platforms. These types of tools are just too advanced. Yeah. So listen, traders, I want to thank you for your time. If you didn't answer the poll, I understand. No problem. Maybe you can, you can't. Either way, I want to thank you for coming to the event. Thank you for putting up with me for 2 hours of your life. We appreciate your time and your attendance. And yeah, I really think that you guys are in good hands with the tool set. It's one of the best we've ever built with regards to levels trading and zone software. And we will see you guys tomorrow in the AMA. And for those of you in the prop program, you guys are ready to rock and roll. We don't announce the winner till tomorrow because we need time to pull the list, and we put it into a draw. We have a draw tool system that gets put out. And Roy and Jim, if you can post the links in here for the registration as well as the purchase link, that'd be great. Put both of them in here. Yeah, that'd be great. The AMA tomorrow, you just click on the link, guys. It's there. I couldn't tell you the time zones because I'm in some random time zone. I'm on the other side of the world right now. I'm on a family vacation in Europe, but we had these events planned out, so I'm jet lagged to the max. Right? You know, still trying to. You know, it doesn't even get dark here in Europe. It's 2 in the morning. It's still light out. So, guys, I want to thank you for your time. I want to thank you for your attendance, and hopefully you guys found this event valuable. I enjoy being here, and you know, it'll probably be posted. Roy, Jim, maybe talk to Ashley and talk to yeah, I'll talk with Ashley and we'll make sure that link gets posted, guys. It'll be there. It'll be there. Okay, we'll make sure it's there. All right, guys. So you'll get a follow-up email with a webinar recording, and everything will be there, guys. Enjoy your evening. Enjoy the rest of your day. And I'm going to go and get some shut-eye, and then we'll see you guys tomorrow in the AMA. Take care. And don't worry, we're going to go over smart money concepts. We're going to go over scalping. We're going to go over higher time frame filters for our prop program system, everything. Right, guys? So, oh, Jim is saying sign out and sign back in. If it's not there, just sign out and sign back in. Yeah. All right, traders, have a fantastic day, and we'll see you guys mañana.